close for many ordinary Iranians, U.S. threats barely register. Video provided by AFP News. Look, the Trump administration is going to extreme lengths to disrupt as much oil from Iran as possible, and the implications for the oil market could be severe. When the Obama administration sought to isolate Iran, it built an international coalition, put in place tight sanctions, and tried to curtail Iran's oil exports. It worked, knocking around 1 million barrels per day offline. Still, the Obama administration granted leeway to an array of countries that depended on Iranian oil, including India, Japan and much of the EU, by granting them exemptions from sanctions as long as they did their best to reduce purchases. The Trump administration has no compunction about making harsh demands to various countries, including U.S. allies, to cut off Iranian oil. The U.S. government is calling on its allies to zero out imports of oil from Iran by November 4, or else face sanctions, and Washington is leaning towards granting no waivers at all. An official from the U.S. State Department said on Tuesday that it had plans to follow up on the matter with Turkey, India and China, even as the U.S. is trying not to adversely impact these countries, Bloomberg reports. Late last week, Bloomberg also reported that the U.S. has sent a request to Japan to completely halt imported oil from Iran. Japan imported a little less than 180,000 barrels of oil per day from Iran in 2017. More gas prices. Summer 2018. Prices fall over past month. More OPEC ministers strike deal to boost oil production levels but don't say how much more. As oil prices climb, Trump leans on OPEC to ramp up production substantially. The fallout from a hard line from Washington could be significant. In the lead-up to the U.S. withdrawal from the Iran nuclear deal, many analysts predicted that the Trump administration would struggle to match the impact of international sanctions on Iran from 2012 through 2015, particularly because the U.S. would have to do it without the help of the European Union, Russia or China. As such, the thinking was that the Trump administration might only be able to disrupt a few 100,000 barrels per day of Iranian supply. However, the impact is starting to look more substantial, and even Iran acknowledges the threat. I don't believe they can receive waiver from the United States, Iranian Oil Minister Bijan Zangana said in a Bloomberg television interview. We are going to find some other way. In this May 5, 2018 photo, President Donald Trump speaks during a roundtable discussion on tax reform at Cleveland Public Auditorium and Conference Center in Cleveland, Ohio. Trump says he will announce his decision on whether to keep the U.S. in the Iran nuclear deal on Tuesday. AP photo, Manuel Bales Sanitas, org XMIT, WX106, photo, Manuel Bales Sanitas, AP. The market was more relaxed about the impact of renewed U.S. sanctions on Iran when it was first announced, but now there's a growing realization that we could be losing close to 1 million barrels a day of exports. Nevin Na, an analyst at Energy Aspects Limited, told Bloomberg. Oil prices spiked on the news, rising by more than 3% on Tuesday afternoon. WTI is back above $70 per barrel for the first time in over a month. The effect of knocking 1 MBD of supply offline by the end of the year is hard to overstate. The oil market is already in a deficit situation, with inventories continuing to decline. Venezuela is expected to continue to post production declines, likely losing several 100,000 barrels per day of supply by the end of the year, at the very least. Surprise outages from Libya, Nigeria and, most recently, Canada came out of nowhere over the last few weeks. Together, all of the disruptions more than overwhelmed the 600,000 barrels of oil per day that OPEC is set to add back onto the market. As such, the oil market was already trending in a bullish direction, but the possible outage of 1 MBD of supply from Iran would be pretty painful. Recognizing the dangers here, including the potential political fallout, the Trump administration is asking for more oil from major producers. On Monday, U.S. Secretary of Energy Rick Perry said that the increases from the OPEC meeting last week may be a little short of what is needed to keep the market balanced. Analysts are now speculating that he or other American officials will ask Russia to boost output in order to prevent oil prices from rising too much. Sec. Perry, after all, is set to meet his counterpart, Russian Energy Minister Alexander Novak, at a natural gas conference in Washington this week. It's not a big leap to think he's going to ask Novak for more oil after today's commentary, John Kilduff of Again Capital told CNBC. Kilduff noted that such a request would be unusual, but these are strange times. Previously, the U.S. asked Saudi Arabia to boost output to offset declines from Iran. However, making up for a sudden loss of 1 MBD, especially when other outages are multiplying, will be exceedingly difficult. In fact, Saudi Arabia and Russia may not be able to account for such sizable losses. That means that the market may have to balance via demand destruction, which is to say, oil prices could be heading much higher. Oilprice.com is a USA Today content partner offering energy industry news and commentary. Its content is produced independently of USA Today. More top reads from Oilprice.com. The bullish truth of OPEC's agreement. Saudi oil minister, OPEC agreement is just the beginning. Gulf of Mexico production expected to hit record high. Read or share this story. https://usat.ly/2yinhai